on the residential side, the trends there are getting less bad. And I want to cover 3 different series and talk about one thing prospectively that is going to likely continue this dynamic. So the first is around builder confidence. And that series bottomed in December of 2022 at a reading of 31. So the range is 0 to 100. Since then, it's risen every month. So January through June. The latest update for June is 55. So it went from 31 to 35 to 42 to 44 to 45 to 50 to 55. We got yesterday the update on starts and permits. The headline number was a strong number, but you always have to be careful with that headline number because it includes not only single family, but multifamily. And we know that the multifamily component is very volatile. So looking at the single family piece, the numbers there also suggest a less bad trend. Now, don't get me wrong, these numbers are still down significantly year over year. And finally, on the home price front, from June of last year through January of this year, home price trends were bad. They had been getting worse or less good for quite a while. And then we got a handful of prints that were really negative around the summer of 22, annualizing at a negative high single digit rate. The last 2 prints, however, and bear in mind, these are very lagging. This is the FIFA series, which is less lagging than Case-Shiller because it's a 1-month series as opposed to a rolling 3-month series. But the last 2 prints there, both have been positive. So plus 0.7 and plus 0.6 versus basically 0 to 0.1. And those couple of prints that were negative 0.5. So all of this is suggesting a less bad dynamic, still not good on a year-over-year basis in absolute terms, but definitely less bad. And then the thing I wanted to point out prospectively, and we covered this exhaustively in our housing themes update from a few weeks ago, is that the comps on just about every housing series out there are going to get much easier in the back half of this year. Obviously, we're still very much in the quad 4 camp. We don't think anything about this changes any of that. It's important to draw a distinction between the existing home market and the new home market. So the existing home market is tremendously inventory constrained. That's why activity levels there are still down close to 50% year over year. But the new home market is showing these definite less bad trends.
It also means that inflation, if you take that out, you take your point on Case-Shiller or FIFA, and you just push that out 12 months, you're going to get less, the shelter component's going to come down, but then it's going to go back up again. I mean, and by the way, it's going to stick at a much higher level, which is already embedded in our numbers. So that's, it's going to be extremely hard with that point that you make on housing to get inflation below 3.5% and stay there. We don't have that, by the way. We have it going back up inflation in the first quarter of next year.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.